Good evening, folks. We're waiting for most folks to join us here uh, on our State of the Market address. Normally we have these events where we'll be sitting inside of a restaurant and a really good one here on Sand Lake Road. And y'all would mostly have enjoyed some water and iced teas at this point in time and also a glass of wine. And so Tom and I would be together and catch up on good old times. And we always enjoy drinking a glass of wine. So I'm bringing it back in, and I got myself a glass of wine. And I encourage you to go get yourself a glass of wine or something nice you want to drink. I know Tom has one of our other vices we enjoy together. He's got his favorite cigar there, but
Yeah,
have a
I'm
great glass of wine while you're enjoying this with us.
I'm trying not to indulge in too many vices, while we're interacting with technology, because I think we're of that generation where it's not the most comfortable thing, if you know what I mean. I don't remember seeing a PC until the late 80s. I mean, in the army, we literally took out the hard drive every night and put it into a lead lined vault because we were afraid somebody would be able to steal whatever information on it. So it's that weird generation where, like, our kids like gargle this stuff. They wake up and they're like, boom, I know exactly we still had the computer cards to put in the machine to get it to do things. So
Well,
hey,
you and I agree
all
both.
for me.
We probably would have enjoyed sitting at a restaurant right now, having this conversation with you guys face to face,
Yep.
and just the whole evening. But thank you, Tom, for joining us tonight. I see that we have several folks who have joined, and I'm going to allow probably another minute or so just to allow most of the other folks to dial in, and then we'll start this evening's great conversation. But it was very, very cool to do our State of the Market address in January. And Tom was kind enough to come down to Florida to be with us. And we had some great conversations. And I remember very specifically, we just came off a fantastic year in the markets, right? 2019 was really, really strong year. And every indicator that we saw in January was really positive. Markets started strong again in the beginning of January. And I remember very vividly our time together with y'all and Tom's comments. And I remember very specifically towards the end of the evening, Tom talking about what lies next for the next 6 months, and he's going to be doing that tonight again. And he mentioned this little issue out there that's still hanging and developing and not sure about, called COVID-19, the COVID virus. And here we are. Boy, have things evolved for us in a tremendous way, just to show how quick things can change, right? Maybe a good comment to say we should really embrace our families and enjoy our families and embrace the moments of what we have in life because it can change so fast. So Tom, I know you remember that night, and that part of the presentation was honest and it was thoughtful and it was thorough, but unfortunately, that part came true in a big way.
Well, I also said there was no way in heck that we were going to have a recession in 2020. So that was obviously completely out of left field. But yeah, I mean, listen, at the end of the day, I think, without spending too much time on it, I think that's the value of having sound planning, right? You just never know where things are going to come from and what direction you're going to get hit. And who would have thought? We've had prior pandemics and diseases, and whether it was Ebola or H1N1 or SARS, we always managed to get through it. And I think the market modeled that, right, in the past, and that's what I think the market looked at. But little did we know that we were, the big added spice to this whole thing was the shutdown. I don't think we had ever reacted quite that way, and are still reacting to that way to, it's a result to an infectious disease, which, it's debatable. I mean, we can, I don't know what the best way to do it. We could just jump into kind of
Yeah,
do
let
let's,
me
yeah,
let me set it up quick here. So we have a
sure.
disclaimer that we have to show to make sure all the lawyers are happy.
Yep.
Exactly as you said, 2020 has looked very, very different for us. A lot of things happened during the 6 month period of time. Probably most eventful 6 months that we've had in a long, long time. Just the cancellation of sports events. I remember just back in early or late March, early April, just shocked by MLB canceling and then the NBA canceling and
Yeah.
my favorite thing, the golf events and Augusta being canceled. And wow, this stuff was becoming more and more serious. We started experiencing volatility like I have never seen. And with all my gray hair, I've got 25 years of experience in this industry. Tom probably has more. Never seen a day where the markets goes down by 9% and thought it was completely historic. I mean, I was stoic having dinner and explaining to my 14-year-old what just happened, and lo and behold, 4 or 5 trading days later, it goes down by 12% in one day. So an interesting period of time. For y'all that has never met Tom, let me introduce Tom to you. But I'm going to do that in a second. I'm going to let just share with you that what we're going to be doing tonight is take about 45 minutes. I want to introduce Tom. I want to give you a format by which you can ask questions. Our favorite time together is probably about 15 minutes before we end. So we're going to try to be done in about 30 minutes with just comments of the markets, a review of the last 6 months. How do we see the next 6 months? Tom's going to go through that in detail with you guys. I'm going to share with you a little bit more about what's new with our practice, what have we done as a result of the level of volatility, lessons learned, if you would that makes us even better, upcoming events that we're having as life comes back here in Central Florida. And then I'm going to open up the floor where you can ask any question you want. We're going to read it from the chat board. So you can type in your questions. We'll read it out loud, and Tom will answer those questions for you. Normally, it's the most favorite time of our evening together, and so we'll be smart to allow about 10 to 15 minutes for questions and answers. And feel free to ask any question you'd like. Um, so Tom is my good friend. He's a certified financial analyst. That just means he's a portfolio manager. Tom has got a lot of years of experience, as he's mentioned, his military background, working for many different financial institutions. Um, from my perspective, the two things I like most about Tom is he's a straight shooter. He tells it the way it is, and he has really amazing penmanship. He has the ability to write fantastic market summaries and updates, put it in layman terms, so that everybody can understand. And it's very, very helpful. And thank you, Tom, for doing the hard work. I think one of the toughest things ever to do is to find somebody you trust that has had the line of experience, the amount of experience, the time frame to put things in perspective. And Tom puts a lot of this chaos in perspective. Tom also has taken probably multiple personal phone calls from me as I was experiencing new normals myself and just shaking my head and saying, "Hey, Tom, help me out with perspective. Thank you for taking my call, Tom," and not pressing the delete button and answering some tough questions. So happy to have Tom. And Tom, I would like to turn it over to you. Please share with us your comments over the last 6 months and what you see in your crystal ball as we're going into a very interesting period of time too.
Okay, great. Thanks, Hilgardt. Thanks, everybody, for coming on. I know this is a strange way to do things. This is a very personal, in my view, very personal business. I mean, that's why you have an advisor, someone you could talk to, someone you could trust, someone that you actually meet with. And Hilgardt and I were just talking about the fact that, and my wife pointed it out too, it's like half of your face being covered, that's like half of your nonverbal communication is gone. So it is a strange time. Obviously, when we start the discussion about what's been going on the past 6 months, we're going to probably focus on the more near term, but just kind of, scratch your head a little bit and think back. It wasn't 10 years ago. It was only a few months ago. And the biggest thing on the horizon was what the impeachment trial was going on. Trade phase one, China deal was on the table. We had just closed the books on a really solid, very little volatility in 2019. I think we got something like close to 30% on the S&P. So it was a pretty good year. So as we rushed through, the first part of the year, and then all of a sudden we started having these rumblings of, a problem overseas. And then, Trump closed down travel from China, and that created a whole flap up. And then we stopped travel from Europe. And then, in the middle of March, we shut the country down. So that's been the thing that I was talking to Hilgardt about, is this has really been an unprecedented response to a virus. And, it's interesting because I don't know that the infection / death rate / recovery is any different than others in the past. But, and again, it depends who you listen to on the science, but we shut the country down. And that's significant because we took an economy that was booming and it was firing on all cylinders, and all of a sudden it was gone. So, Andy, if we could move on to the next slide. I talked about volatility being pretty subdued, and you look at what was going on, and this is only from January, but we were somewhere in the low double digits, 12, 15, 16 on the volatility, and we crept up to about 80 some odd points at the worst of it in the middle of in the middle of March, probably around the end of March 23rd time frame. And what's interesting about that is volatility basically is a measure of nervousness in the market. And so when it's a high number, that means that markets are pretty skittish, and Lord knows we saw that happening in the end of March. As Hilgardt alluded to, there was quite a bit of pain that was very quickly inflicted. And you could see how that volatility just kind of drove up like a mountain toward the end of February. And then it's been slowly but surely sort of coming down, but it's nowhere near where it is around historical levels. So that's been a big story the first 6 months of the year or so. Next slide, please, Andy. Unemployment, I would say, obviously, there's been a lot of talk over that, right? We had record low unemployment in February. I think we were down to 3.5%. And all of a sudden, depending on who you listen to, I think today's number had something like, since the shutdown began, we had something in the neighborhood of over 50,000 or 50 million. I was like Joe Biden there, mixing my millions and thousands for a second there. 130 million people died from COVID. What's interesting about it was that, unemployment literally overnight is what happens. You shut down the economy, people don't have a job to go to, they're going to get unemployed. The problem that I've had with the reporting and the sensationalizing on the unemployment number is today they did it again. They said, over 51 million people have filed for initial benefits. Well, that's great. That means that a lot of people went and asked for a week's worth of unemployment. Does that mean they're unemployed the next week? Does that mean the people that asked for it this week are still unemployed next week with the next group of people? No. So the problem has been that there's been a lot of sensationalizing of these headlines, and albeit unemployment right now is probably come down to about the 11-ish level, which is still really high compared to 3.5, but it just goes to show you that people, of that 50 million potential people that have gone to work, there's only about 18 that are continuing to collect benefits. So that's an important thing to note. So, we had the last 2 months, we had something like 8.5 or 8 million jobs created. Literally, if we have another 2 months like we had in May and June, we could literally bring that level down to about 6%. So it makes it just as quickly as we got onto this bad unemployment mess, we can get out of it just as quickly. But that's an important number. I think what I would say is, one thing I would leave with folks is that with any of these economic numbers, statistics are very dangerous, right? So you can use them however you want. And I think there's been an awful lot of that. And we can get into it a little bit later, because I do think it's a political year. So there's a lot of that tainted through how people talk about the numbers. So next slide, Andy, please. Oil. Hey, remember, I don't know if folks remember what happened with oil, but when you don't go to work and businesses don't manufacture things, it shouldn't be a surprise that if oil is one of the primary raw materials that we use in those processes, doesn't get used. And there was a huge, I remember receiving calls from folks just not knowing what to do because there was a flame up in the oil futures contract toward the end of April where it went down into the negative 100, a couple of $100, which basically meant that if you wanted me to take your oil, I would not only take your barrel of oil from you, but you would also give me $200. That seemed a really obscene trade, right? And I think that just showed how much the impact of oil being not utilized during a shutdown created this huge mess. Part of that, if you folks remember, was the Russians and the Saudis decided to get into a price war, which was frustrating because they did it right in the middle as we shut down, and that blew up the oil market. And I think that was more tailored to try and put our frackers and our oil independents out of business because they saw an opportunity to drive the price down and drive some of our producers out. So that was another huge story over the past 6 months is how badly oil performed. And what's interesting, though, is once the economy started opening up, more and more states began their phase ones and phase twos. Oil's back to about $40 a barrel, which is kind of where it's been. And that whole scene of where people were saying, oh, I'm going to go to the gas station and people are going to pay me to fill up my gas. It didn't really happen, but it was a nice little fantasy for a while. But oil is back again. So then but it's still low, which is good because going forward, I think it will help the economy with respect to keeping costs down for not only consumers but for businesses as well. Next slide, please, Andy.
Tom, I see folks asking questions. So great job. Thank you, Kathy. Thank you, Ron. We got your questions. We probably will hold them until it's the question and answer time. But I encourage anybody who's part of our time together to please type them out. Sorry, Tom, go ahead.
Yeah, no worries. The other thing, I try to keep it as interactive as we can, but I realize, if you can't see somebody on the other end raising a hand, we'll do the best we can with what we got. The other kind of big story that I thought was super interesting was, as we went to the shutdown economy, think about all the things that you started using and that you started using more. And a lot of those things turned out to be, technology companies. You look at like the Netflix, and I don't know how many people watch the Tiger thing, but my wife watched that. It's driving me crazy. Every time I walked in a room, there was the Tiger King thing on, and I was like, I don't know what this is. I don't know what this is, but this is disturbing, and it bothers me that my wife is watching this. But
that's wrong. So many different levels, man.
so but long story short, I mean, think about all that type of stuff. You had companies like Zoom, and you had companies like, although Amazon, I would consider that a retail company, but because it's internet based, it was considered a tech company. And it helped drive this rebound that we had. And it was a lot of it was driven by technology because, unlike 9/11, where people were afraid and they hunkered down in their basements and they were afraid that we were going to get attacked by terrorists, we didn't have the same kind of technology, nor in 2008. Now, all of a sudden, when people were told to stay at home, surprisingly, they just didn't stay at home. They were actually productive. And all of these companies that are part of the NASDAQ were instrumental in getting people back online. And what was interesting is, you talk about a straight V. We literally came out of and hit record levels on the NASDAQ, within 2 months, 2.5 months of hitting rock bottom in March. So that to me, the NASDAQ has sort of been maligned by a lot of folks as like, well, those technology stocks, they're kind of like, your young kids out of college, they got ideas, but, are they gonna make any money? And that's kind of what NASDAQ has been. It's always been the old guard, right? It's always been the Dow and the S&P. And now all of a sudden, it's a serious group of companies that are addressing today's, the needs that we have today. So that was another huge story, was the roar back of this market has largely been not broad-based on traditional type stuff like banks and car companies and manufacturing and financial services. It's been technology. So that's the world as we know it, I hate to say it, in some respects has changed, but in some respects it's changed for the better, because I think the fact that we can do this right now is thanks to technology. And I think this is something we couldn't have done in 2008. And the fact that we can have a discussion is a good thing. because that helps alleviate concerns and fears, and you can see other people and ask questions. In '08 and 2001, you were hunkered down in your house and not much was going on, and you were alone with your thoughts, which is not always a good thing. So, Hilgard's, he's hitting the sauce. I'm going to smoke a cigar here. I mean, it's not good to be alone. As far as the economic outlook goes, listen, I'm not going to lie to you. I mean, a lot of the interesting thing here is that although we're out, I think we're going to be out of the shortest recession we've ever seen, because I think we will see a bounce up in growth. The fundamental issue here is when you shut down the economy, that was kind of a binary decision, right? That was an on-off switch, right? We're open, we're not. The reopening is kind of like a dimmer now, right? And that's what's frustrating about it is you got the federal government that's got its ideas. You got 50 state governments that have their own idea, and we can discuss whether their ideas are in our best interest or for political reasons or whatever. There's a gumbo of that sort of mixture. And then you've got local governments who are doing whatever they want to do. And sometimes you got these wishy-washy governors who are saying to people, well, we defer to the local level and you guys decide how you want to do it. So in one county, they'll mandate mask wearing, and in another county, they won't. In one county, they'll say you can go to a bar, and in another county, they'll say you can't, or you can only have 20 people there. So that's what the biggest short-term sort of risk to me is that I don't know is what are we going to look like as we reopen? This virus isn't going away as evidenced by the spikes. And I know you folks down in Florida, are in the news a lot, and again, I don't know how much of that is accurate, how much of it is inflated, how much of it is right on the money. Again, it just depends who this data is in. But if you've got a governor saying, we're going to send our kids back to school real time in, August, September, but at the same time, the media is telling folks that we're going to close, that sends conflicting messages. And I think one of the biggest problems that business and the markets have is a lack of clarity. So I think that's the biggest challenge going forward is how is this economy going to react to these fits and starts? And I mean, in a perfect world, somebody waves a magic wand or produces a vaccine and everybody gets one, and then, nobody has to worry about this, but that's not going to happen. So that's my fear is you're starting to see, you saw an initial resurgence, right? But then at the same time, you saw this sort of slowdown or potential scariness in the slowdown. I think the other thing that we really talk about is what the Fed did. And unlike 2008, where you had this fear of whether companies were going to go bankrupt, there wasn't going to be any liquidity, I don't think liquidity is a problem right now. In fact, the Fed has done everything it possibly can to depress interest rates as low as they possibly can, but they also stepped in to take care of, pretty much anybody who's going to go belly up. So the interesting thing about that is you have some pretty risky characters out there that are backed now by the Fed, which in my opinion, is a good thing because basically it's like saying, hey, I can buy something that I normally wouldn't have bought before that's a little bit risky, but because the Fed's covering my tail, it's going to be guaranteed. And the difference between getting, say, 70, 100, so 0.7% in interest and getting 2.7%, it's meaningful to you, but you would have to take a lot of risk to get it in this environment. So I think the fixed income markets are a really good opportunity over the next few months to make some hay in. Obviously, I'm just really concerned primarily about, that's why you see a lot of yellow on the screen here. I'm primarily concerned about our ability to restart the market. It's kind of like an 8-cylinder engine, right? And it's only kicking on 2 right now. And then, the third one comes on and the fourth one, and then all of a sudden the third one slows down and you're like, oh crap, let's go back to 2. And that's what we don't want to keep seeing. We don't want to keep seeing these fits and starts. So that's kind of where we are now. What do we got for the next slide, Andy? Yeah, so again, equities, we've come and run back really hard, folks. My point to people would be at this point is, ideally you'd love to get to 29,000 on the Dow, and if you were nervous, cash out, and you were rewarded for you didn't feel any harm. I'm of the opinion that listen, you got to learn lessons do cost something. And if you have been very nervous during this whole process and, your goals have come into question, this is a golden opportunity. I don't know where we were today because we sold off a little bit where we finally ended the day, but, we're somewhere around the 26,500 level. That's a great opportunity. You're up year over year. I mean, you may be negative for this year so far, but it's a good opportunity to rethink your strategy. If you're comfortable with it, then so be it. This is the price we pay. But I would be very, very concerned if you were nervous about this. So we talked about what we're going to watch for in the next 2 to 3 months. Are we, how is this reopening going to work? I mean, it's, you see what's going on in Texas and California and in Florida, there's all kinds of talk. We've already started to, we were talking with Hilgardt before about, the whole mask thing. I think, honestly, I don't know whatever the logic was, but they first told us that we didn't need them. Then we needed them. Now people are just wearing them because they don't want to be hassled. It's like, I just want to go into my store, get whatever I need. Let me put my mask on. And I just, I don't know what the guidance is. So better safe than sorry. So I think those are the kind of things that are happening. I think people are shopping more from home. There's a lot more, reliance on the technology that we're talking about. As businesses move forward, listen, if you live in a big city, and we didn't even talk about the rioting and all that stuff that occurred, but think about this. Your people are, at home, they're productive, and you've got a $20 million a year lease at some office building in New York City. Oh, and by the way, the city's, burning down because people are rioting and it's a scary place. If you're a business person, wouldn't you kind of just say, okay, thank you for your time and effort, and I'm out of the city, and I'll go set up someplace in the suburbs, and my employees can continue working from home. And I think those are the kind of adaptations that you're going to start seeing, as I think big cities are in decline because of all the things that we talked about. Look, you have very tight population centers where people can get infected. You've got, social tension, and it's expensive. I mean, those three things are not positive for the future. So I think, these businesses and corporations are they need to stay afloat and keep going. The concern is, is what's it like on the local level? I mean, we saw Elon Musk pull the fast one in California. He just said, listen, I'm going to open up my factory and you're not going to do anything about it. And, well, yeah, you're compadre, right? So the police went, talk to the county, and the county said, talk to the state. And he's like, I got another hand gesture that I won't use, basically all of them, right? And he opened his factory, but we're not all Elon Musk, right? And all of these other companies are afraid because they don't want to get in trouble with the government. So, those are the kind of things that we need to keep watching, is how much of a groundswell this is going to be. If we're going to get these fits and starts, and this is, when we talk about the political motivation for this, because I don't understand why the same kind of things would not apply in Texas as they would in Florida, as they would in California. I mean, it's not a different virus in these places, so the responses should be the same. And for the amount of time that we took to shut the economy down, it wasn't just take a break, flatten the curve. It was take a break so we can get ready, because this thing is going to be there with us. And I don't see that on the part, and you especially see it, folks, I know you probably see it on the local level with the schools. I mean, what did these people do for 4 months? They weren't teaching. So why aren't they putting a plan together on how they're going to, take care of our kids in the fall? Like, oh, we need more time. We need till September. And then guess what? By September, it'll be cold and flu season, and then they'll tell us to stay home. So anyway, okay, so let's we've talked a little bit about the mid-year, but I don't know if we want to stop here and do some questions, but that's kind of what I mean, I think we're at a place where the next kind of shoe that needs to fall is we need to figure out who's gonna win the election, because there is talk that the Democratic Party has been moved very far to the left, and there's talk about undoing a lot of the things that have made the country successful in more recent years via the Trump presidency. I don't know, the president's on the ropes according to polls. I don't know how much of that stuff I believe, because I think it's kind of the same thing as like, why do I wear a mask? I don't want to be hassled. So am I going to go out if I'm a Trump voter and tell people that I'm going to vote for Trump? No, you're not going to say anything because you don't want to be hassled, because you'll get called a name or you'll get into an altercation. So why bother with it? So I don't know how silent. I know people are silent, but I just don't know how big that silent majority is, because I know people don't like seeing their cities torched, seeing, statues torn down. I get that there's pain out there, but there's got to be a better way to deal with it. And I don't think violence and Green New Deals are the way to do it. So, Andy, what's on our next slide, bud?
Yeah, I think
Or is that it? Are we stopping there?
a lot of folks' questions have a lot to do with the next section. So, Tom, why don't we take about 5 more minutes, and then we'll get into the question and answer session here.
Awesome. Okay, great. So, I like specifics, but I don't think this is a time for specifics, to be honest with you, because there's just like we had no idea how this coronavirus would impact, the stock market or the market, we knew how the shutdown was going to impact everything. But, I would consider, if you do have the time and you have the inclination to sit around and think about what is it you're trying to achieve, with your investments. What are your goals? Revisit all that stuff. What kind of plan do you have in place? And like I said earlier, I alluded to it and touched on it a little bit earlier. If all this has made you exceedingly nervous, then you need to rethink your plan. Okay, that doesn't mean that you're a bad investor because you got nervous, but you obviously may not have the same sort of risk profile that you believe yourself to be. That's what nervousness is, right? At the end of the day, is if, like, I didn't change my allocation and I'm okay with it because I do this, right? So I didn't really have a fear when we were talking with Hilgardt and he's saying that, hey, the market's down 12% today. I'm like, okay, whatever. I wasn't sitting there saying, oh, I'm going to go sell my house and buy into the market at this point. But at the same time, it's like the way I was allocated, I was comfortable with that loss because I realized that I still have time to recoup my investments before it's time for me to use the money. If I was closer to retirement and really needed the money that I had out there, I would have been concerned, right? And so, this is a golden opportunity. Things have kind of quieted down. It's a great opportunity to, think about what you want to do with your money. What's your plan look like? And are you still achieving your goals? And that's where, it's a perfect entree to, for what Hilgardt does. I mean, that's his job, right? He's your healthcare or financial healthcare professional, right? He's giving you the checkup. He's telling you how things are, how you're feeling, and it's important to be honest with him, because at the end of the day, like I said, there's the only bad answer here is that you make mistakes that cost you your goals. So this is a great opportunity for that. So I don't know why Andy hopped a slide on me, but I wasn't done with that one. So anyway, yeah, well, we talked about that. So yeah, this is a perfect time, and I'm sure Hilgardt's got all kinds of time. So get on his back, it's like, and have hard conversations, because at the end of the day, look, this is your money and this is your family and this is your livelihood. And you need to articulate what it is that you want to achieve. And if you're not feeling good, that's what you've got an advisor for. And I think I'm a strong believer that, if you feel bad, you can, think about it this way. You don't have to be an investment expert, but think about it. And I'll give you a medical analogy. Say you feel bad, you got a pain in your side, right? You may not know what exactly that is, some sort of muscle spasm, or, maybe the beginnings of a heart attack or something, but you go to your doctor, which will be Hilgardt, and you can at least articulate to the guy and say, hey, I got this shooting pain under my arm. I don't know what it is, but it's making me nervous and making me feel. And he may tell you, hey, you got a pinched nerve, and these are the exercises that we need to do. Or he may tell you, we need to put you on medication because you're in imminent danger. But at least, you were articulate enough to tell your professional what it is that you wanted. And I think that's an important part that, is completely on you, the end client, to be clear on what it is you're trying to achieve and articulate that to somebody like Hilgardt. And he'll make, he knows all the different funds and strategies and all that type of stuff that you need. But that's the to me, that's an important opportunity right now to take advantage of. So that's my 2 cents. So we're past halfway on 2020. You know, God knows what's going to happen. You know, in the next
We're
3.
probably expecting, Tom. We're probably expecting some more volatility, right, as the election season is warming up, and the TV ads is going to go off the rocker like it normally do. It's election time when there's more political ads on TV than car buying ads on TV, and it's happening in a big way. A lot of the questions that we have at the moment is a lot to do with what the future looks like. So Kathy is asking the question: is it feasible to think that the market can recover to the level we were before? Meaning, say, is it possible to see? Is it feasible that the Dow and the S&P will be turning positive in the next 6 months? What's your thought? If I always say gun to the head answer. What is your thought that equities would do in the next 6 months?
So look, so I'm a bull at heart, and I won't. I'll be a bull and go down in flames, but I also have to be realistic, right? It really depends. Is it possible? Of course it is. It's possible it can happen in the next 2 weeks. The issue is that I see is that the potential for this thing to come unraveled as we get closer to the election, if Trump doesn't have a legitimate chance of winning. Now, there's all kinds of statistics and studies that have been done about which presidential candidate. And actually, Andy, I did pull some of that stuff about which party does better on election year, that type of thing. But I think this time around, it's just so flippin' different. We have a president who's unlike anything we've had before, and we have a candidate that's pretty close to nothing like we've seen before. What I can say is, if it looks like as we get closer to the election, now we're talking about, late August, September, if Trump starts closing the gap, I think that's good for the market. I think the market will figure it out. But I think we're going to have a different sort of trajectory between then and now. That's going to be a secondary thing leading into the election. I think between now and that period, there's going to be some volatility because of this whole spiking of the virus and what kind of numbers we're going to see as far as reopening is concerned. If we get news that this vaccine works, the market's going to shrug this stuff off and take off. And we could literally hit, the S&P actually earlier this week had actually turned positive for the year. It was the second time since early June. It didn't hold it because we sold off again, or was it might have been last week, but we can do this. We're that close. We're at 27. Now think about it. We went from 18.5 to 27 in 3 months. I think we can get to 30. But so my thinking is those two things, right? How quickly do businesses reopen, right? And life gets back to normal, and that means kids going back to school. And then the second wave, if you pardon the pun, for the market is going to be, what's it going to look like post-election? And I think if Trump closes the gap, which typically happens, people, when they get the gun to the head, Hilgardt, all of a sudden, they're like, well, I don't like Trump, but I like having a job and I like not paying the taxes. And
on that note, Tom, one of the questions that we have is, let's see, we answer this one neutral. What would be, in your opinion, what would be the impact if Biden gets elected to the markets? What do you think? Would it be positive, negative? Would it be big? Would it be small? What do you think it is?
So I think the initial it'll be initially bad, because now you're talking about additional taxes, you're talking about more debt, you're talking about Elizabeth Warren as a Treasury Secretary and more regulation. And I think all of those things, because they're not going to be abundantly clear, in the platform, at least they're not going to be talked about. So that'll be the initial sort of kick to the market when it realizes that this is not going to be the same party that it was, or the same sort of activity that we had before. So But then I think ultimately it just hinges on the fact that, if the Congress remains divided, how much is he actually going to get done? And how much of it is going to be via executive order or, I mean, think about it. Trump had to do pretty much just like Obama had to do everything via executive order because he couldn't get, the opposing side of Congress to behave. So I think, short answer to the question is, I think if it's abundantly clear that Biden's going to win, I think there's going to be a lot of fear in the market until they get clarity on what exactly he's going to do. And I think they're just going to super work.
At least the way that I probably would answer that myself too is that um, the devil you know is better than the devil you don't know. So
Yep.
you had a president for 4 years, you know his style. You can probably perceive that that style will continue. If I answer that question myself, just very independently, it seems like the Trump administration opened up the arteries of commerce and promoted the markets' growth and companies' growth and profits, and took away, regulation, or lightened it, took away a lot of the red tape and reduced taxes in a big way. All things that stimulate the economy. Um, and if we have a continuation, we probably have a little bit more of a stronger comfort zone to where we are at the moment. Now, Kathy's asking a really good question. I'm going to Tom, if you don't mind, answer this one. Is this a good time to look into refinance homes or home mortgages, since we are seeing such low interest rates again on 30-year mortgages and 15-year mortgages? And the answer to that is absolutely. We think it's a great opportunity to look at that, especially if you find that there's about a 1% difference between your current interest rate and new interest rate. We warn you to be careful to make good decisions. Come to us. Let us look at it with you. A lot of it has to do with also understanding how banks make money and the best decisions for you. So it's not necessarily chasing the best absolute rate. It's a lot to do with the kind of mortgage that we are committing year to, whether it be 15 years, 30 years, fixed mortgages, adjustable rate mortgages. There's all different kinds, and the banks have a bunch of them. So we always like to communicate which ones the banks are making the most amount of money and teach you the rules of the financial system so that you can utilize it and you can be in control. So really good thought and a good opportunity. Fair to say, about 3 years ago, our interest rates was this low, and as we were increasing our interest rates, you could say you wish to have locked in a 30-year note as an example. Well, now is your opportunity to do that again. So a great question there as well. I want to kind of share with onwards with what Tom was alluding to, and just share with you what's new at the Life Wealth Group, and talk a little bit about the market stability. Tom has shared a great amount on that, and I'll say a few exciting things. We've added a new female advisor in the form of Shay Kute, and we love Shay. And Shay will be hosting next week, as we'll talk about new events, a very specific webinar around women in finances. And we're very, very excited to have her join our advisory team and really focus on either single woman, married woman, woman who wants to know more about finances and how it pertains to them very, very specifically. Then I'm leading a young team of advisors. So the old guy had to go back to school, and I finished a designation that I'm ashamed to say I started 15 years ago. So I'm leading the team. I rang the bell, and I got my designation called the Certified Financial Planner. I feel like my 25 years with experience gave me that certification, but it's good to have a diploma on the wall and to lead the team to say, okay, guys, let's go. So we created a very strong culture of continuous improvement in education, and we all are very motivated to continue that. So I'm already busy with my next designation called the Certified Exit Planner, where I help business owners sell their companies, and excited about that too. So as we talk about the markets, really what I would equate it to you to is a cruise ship. And as we were going through some turmoil times, you could say that the cruise ship started putting out stabilizers. And we started putting out these stabilizers probably about 2 years ago as we were experiencing a higher and higher market. And stabilizers are tools we could use to be able to bring stability inside of a portfolio. And because of this, I would report back to you that we did not have a lot of tough discussions or folks really panicking as a result of this very high volatility, because that cruise ship was already cruising in volatile times, but it had these strong stabilizers, that went out on the side of the boat to stabilize the rocking. But if you still feel that you're in a cabin where you are experiencing too much rocking, like Tom says, come and see us. We can reposition you to a different cabin with some more stabilizers that we can utilize in your portfolio to bring a little bit more predictability to you. We've learned a lot through this down market. It's my third major down market that I've experienced in my career, and excuse me, it's my fourth one now. And from the previous experiences, we have build on that, and we've brought forth some very good advancements. It's in the creation or looking at different types of vehicles that bring stability, also bringing tactical asset managers that has the flexibility by its design to more radically go to cash to avoid volatility or overarch more on the equity side when we're coming out of markets that we have. Proud of Advisors Excel, who has developed, with the help of Sterling Capital, one of our key capital um, money management partners, has developed a very interesting portfolio called the Unique Opportunity Fund. And the Unique Opportunity Fund is a conglomerate of about 25 stocks of really good companies. I'm talking about cruise ships. So, in my analogy, but I would say some cruise liners is in the portfolio that were really depleted in a huge way as a result of COVID. Buying buying low and have really experienced some beautiful returns, an opportunistic buy. In general, I say to you that if you want more stability, definitely give us a call. If you have some cash on the side that you're wondering what's the right time to re-enter the markets, this is a pretty good time to have this discussion. So reach out, let's connect, and let's visit on these types of topics. I just want to thank every one of the families that we serve for having tremendous open communication. We've been communicating a lot. You've been very responsive, and I feel as a firm, the last three major downturns have prepared us very well to do this one in a significantly better way. And 25 years of experience is allowing us to see what really works during times that not many things make sense. So that's a result of what's new here with us and what's the impact that we're experiencing. Um, I want to share a few more things here, and then we'll be open back to questions that we can answer for you. What is upcoming events that we are hosting online? Like I mentioned, the Women's Retirement Roadmap that Shay Kute will be doing next week is a webinar that we're doing. We're doing webinars that's focused on chiropractic doctors. If you have any of those in your Rolodex or friendship circles, we're working with the Chiropractic Doctor Association. We're working with local firms. We are bringing really good information through webinars on how to maximize the the menu of different benefits that is given to a company. So a lot of times I find that until you come to a financial advisor, look at the big picture, many folks that who's worked for companies for many, many years believe that whatever they have been offered is the best offering that is made available. It's really good offerings, but there are other ideas that complements, bring stability, better taxation, more probability of success that your dreams or goals will happen, that you need to be thinking about to complement current benefits packages that are given to you through work. So we'll be hosting some webinars around that. I'm very excited about some personal events that's coming up because it gets us the opportunity to maybe take off the mask and really connect with people again. Some of those is what we call a Tusk of Tuscany in Ballacalina. We have identified a pretty cool, unique venue, which is the country club that I belong to. Really wonderful chef and the staff, and here's the key. At any given evening, there might be one or two tables. So actually safe environment, not high traffic environment, that we ask you to invite some of the friends that you would like to introduce to us and come and have dinner with Yanis and I. Being South African, uh, we go back to our roots of being hospitable and just really connecting with people on a one-on-one basis. So if you have any couples you'd like to introduce to us, take advantage of this opportunity. It's fantastic. The meals are amazing, and you would love the way it looks. It looks truly like Tuscany. And we're starting to have golf outings again. If there's any one good thing is that one of my great hobbies is golf, and golf is COVID friendly. So again, if there's any folks you want to introduce to us, give us a call. Let's have a game of golf together. We're doing that at different venues. We are so excited about many families showing up with us during our group volunteering events. These are events that we want to make a difference in the community for those folks who are not less fortunate. We've had two great events at Second Harvest Food Bank. We have some more events coming up. Again, back to Second Harvest, August 14th. It just seems to me that that ministry and what they do really hits a need that most families have, or a lot of families have in Central Florida. So it's a lot of fun. We so feel good. We spend about 3 4 hours, and we pack uh, food boxes for families that is very, very helpful during this period of time. With other types of organizations, Faith Neighborhood, as well as Live Well Foundation, that will be August 28th. And then we have we're excited about these two events that we do to celebrate our ambassadors and ambassadors elite. So let me just share. Apron's Cooking School is back because of popular demand. We had such a fantastic time. It's close by to our office. And look for invitations for those who are part of our ambassadors club. And if our ambassador elite club, we got something very, very special and secretive up the sleeve that we're looking forward to in a big way. So, what is this ambassadors and ambassadors elite stuff about? It's when folks are kind to introduce other families to us, and those families become clients. If you introduce one family to us, you become an ambassador, and if you introduce two families to us, you become an ambassador elite. And what was absolutely astounding, and just again, I got to say thank you and praise you all. In the last 6 months, we had a tremendous surge of new folks being introduced to the practice. We had 21 new people that was inducted this year into our Ambassadors Club, and 11 new people that was inducted into the Ambassadors Elite Club. I want to thank all our ambassadors and ambassador elites, and we're looking forward to having fun with you together to celebrate. And thank you very much for your vote of confidence that you're sharing with your friends about how we can help. So those are some of the things that's coming up. I want to open up again for question and answers. That anybody have any other questions? Looking at our list here, a good question that's asked is, Tom, are we better off having cash on hand or taking cash to pay off debt? How would you answer that one?
Well, um, debt's pretty cheap right now. So, if you can borrow at or restructure your debt to where you're taking advantage. I know you were talking about earlier, Hilgardt, about mortgages. I mean, I saw 30-year was down below 3%.
Yeah.
So it's the first time it's been below that. So those type of things. I mean, again, it's one of those things that it can be very highly personal. In general, I would say I would pay down debt if it was high interest debt. I know, like, if you have a car payment that's got like a 5% interest on it, yeah, I'd pay that off. But if you've got, a mortgage that's 3.25, yeah, I mean, it's not worthwhile. And given the opportunities that you have to have more outsized returns, in other places. So it's a no-brainer if you're paying an interest rate above 5%. You don't, that's just money down the toilet. But
Yeah.
rates are the way they are right now. I mean, think about it. You can go in, you could buy a car. They're so hard pressed. They'll give you, 84 months at 2%. I mean, that's.
I might add to that, Tom, too, that in times of uncertainty, if you are able to position those monies in liquid environments where you can get a 5 6% rate of return to be better than an interest rate, um, then keep your powder dry right now, because there's a lot of uncertainties. You might need it. So, like for instance, mortgages, you put into the mortgage, you can't get it back. And I think there is opportunities where we can get 3 5 6% liquid right now, over a longer period of time. But that's what I would add. Well, Tom, I want to share just again our gratitude for you taking some time on your busy time, evening time, to be with us. Thank you so much. We will make it up to you hopefully in the month of January, where you'll come and join us, and you and I will have a glass of wine together, and it would be great for our folks to hear your wisdoms. Thank you for your
Yeah.
analysis.
Well, let's not hope it takes that long. Let's hope we start getting to normal before that. But, listen, folks, I realize it's hard. No one's saying that it's, we're not being glib about this. Be safe, be mindful of your, surroundings, and be kind. That's the other thing that I think is really suffered these days, is with people wearing masks and doing stuff online. You're seeing all kinds of really just bad behavior. And, it's like, I know we're better than that. So, hey, thanks for having me. Anytime you need me, Hilgardt, let me know. I mean, you obviously can call me anytime you want. But if you need me to help out with events, or people have questions that you need my insight on, I'd be happy to do that. And, you guys have been great. And I think we'll get through this thing, and we'll be fine, and we'll be better for it. But it's hard to see it right now because it doesn't look really great. So, but
thank you, Tom. Thank you for everybody attending. Have a great rest of the evening, and we look forward to being with you soon again.
Good night.